Hello, traders. Today's theme is don't wait. Don't wait for what? The market's all over the place. How am I supposed to trade this? There's a really good strategy that we've been focusing on for about the last week. That opportunity is still present, but the window is closing. So, Monday, this is what you should be doing. Before we start, please give this video a thumbs up if you've been taking advantage of these trades and making money. I'm trying to reach as many traders as I possibly can, and you're helping me do that. So thank you very much. I've been adding more videos to show my appreciation for you spreading the word about my channel. So let's take a look at some of the recent trades that we've done. I highlighted BTU on Wednesday. The stock was going to open considerably higher, and the stock did gap up, but I told you to be patient. I didn't know where these options were going to open. The stock is a commodity stock, so give it some time, see if it pulls back. It did. So I was able to sell the $10 puts on BTU for 30 cents. They're a week and a half out. I only have to wait a week and a half, and I'm going to generate a really nice return on that position. Let's take a look at some of the others that I've highlighted recently. And you can see I've mentioned these in my videos. I officially did trades on BTU and SMCI a week ago Sunday. I'd mentioned to you all the different factors that made this an attractive trade. We are selling way out of the money naked puts that have lots of option implied volatility. And in most cases, those stocks could pull back 15 or 20%, and we would still be okay on the trade, and they would have to do so in dramatic fashion in a week or two. We're not trying to guess that this is the market bottom. All we're trying to do is to find some clarity within chaos. And because the option implied volatilities are so high and so inflated, we sell that premium on stocks that we're comfortable owning. We let time decay and a volatility collapse take care of the rest. We don't even have to sweat these positions. They've never even been in danger. And you can see on BTU, I sold those for 30 cents. I only did one measly contract, so I'm not trying to muddle your markets up. When I'm on YouTube and I show you a trade, I'm not going to be participating in it because I want you guys to be able to take advantage of it. But I did sell one contract at 30 cents. You can see those options are nickel bid offered at 14 cents, and they expire this week, which, by the way, Friday is a legal holiday. So you've only got 4 trading days this week. PLTR, I sold the $60 puts for $3.40. They're currently 27 bid, offered at 33. RKLB, this was a stock that I highlighted last Sunday as well. You can see those options, we sold them for 50 cents. They're a penny bid offered at 20 cents. More likely, they're probably a penny bid offered at a nickel. They're still way out of the money, never in danger. This is generating a 5 to 10% in the course of a week and a half, 2 weeks. Where are you going to make that kind of money with this high probability setup? This is an incredibly great opportunity, and you don't see it often. Maybe you get one of these instances every 2 or 3 years. Well, we have it now. You got to strike. You got to take advantage of it. This is not going to persist for a long period of time. In fact, last week was really the moment when you had to take advantage of it. I tried to impress that point on you all week long. So in the midst of extreme market volatility, here's a strategy that works beautifully. SMCI, we sold those for 60 cents. Those are the April 17 puts, $20 puts, currently 8 cents bid, offered at 9 cents. These trades, in all likelihood, are going to expire worthless on Thursday, and we are going to generate that beautiful return in a very short period of time. So we're going to be focusing on that strategy again today, but we're going to take a look at what the heck the market has been doing. And you can see that this was the price action last Friday, and that is how the market opened Monday. Big gap down. Whoa, but the market was able to rebound. And then on Wednesday, we had this huge mechanical bounce, short covering bounce. And this was on the heels of an announcement that the reciprocal tariffs were going to be postponed for 90 days while deals were struck. And that announcement came during the day, and man, did shorts get squeezed. I've only seen two other days like this in my 30-year trading career. That was a 10% move. And once it started, you had two gigantic stacked green candles, one on top of the other. I referenced this in my videos this week, which incidentally, if you're new to the whole concept of selling out of the money, naked puts, because option implied volatilities are really high, I'd encourage you, go back and watch my videos from last Sunday, Monday, Tuesday, Wednesday, Thursday. I've been doing them all week long, and I've been highlighting this strategy, and that is what's going to give you comfort level to try this strategy in the future and to be able to identify these situations where the opportunity exists. So please, and also if you're new to the channel, please go back and watch my previous videos. The only way that this is going to work for all of us is if I gain your trust. And the only way I can gain your trust is for you to go back and look at videos a couple months ago, 6 months ago, a year ago, 3 years ago. Get a feel during these major market moves for my analysis. What was I thinking at the time? Did I see the move coming? How are we positioned? Once you have that confidence and trust, you'll be able to really dive into the system and learn it. I've taught a lot of traders how to trade it, and many of you are having fantastic results. So thank you also for commenting to my YouTube videos. So let's take a look at the market and see what we might possibly do this week. The bottom line is I don't know. I don't really have to know day to day what the market's going to be doing because I'm selling out of the money inflated option implied volatility. So my suspicion is this is a holiday shortened week. We have very little on the news calendar this week. So we've got Empire Manufacturing. It's not really a big number. Last week, we did get some relief in the form of lower inflation. Both CPI and PPI came in under expectations, an actual drop. So minus 0.1% on CPI. We haven't seen a reading like that since COVID, year 2020. So this is good news on the inflation front. It's going to give the Fed more breathing room. I suspect that inflation is coming in because the economy is starting to slow down, and we've seen a slowdown in global economic growth. So the one thing that I will tell you is that on a longer term basis, I'd be looking out a month, 2 months, 3 months. I am still bearish because I think that we're due for this economic soft patch, this recession. I don't think the tariffs are the cause of it, but they certainly aren't going to help matters because there's a lot of supply chain disruption that could possibly take place. All of that needs to kind of get worked out. And plus, we don't know what those deals might be that President Trump's currently working on. So maybe there are going to be some really good deals and we'll be able to avoid a lot of the tariffs. Maybe we'll be able to avoid the trade war. China, a little bit different situation there. They seem to be digging their heels in. So we'll see what plays out there. On that note, I do want to mention something very important. I would be super cautious if you're long any Chinese stocks or ADRs. They're actually called VIEs. They are shell companies. They do not have to adhere to U.S. reporting standards, and there's a risk that they will be delisted. I don't know how that's going to impact the ETFs that they're in. I only know that this is not a risk that is worth taking. I would be out of all Chinese stocks. That includes options, that includes long stock, short stock. Just don't trade it. Let that news settle out, figure out what might happen, and then assess it later on. But there's event risk. in those stocks right now. So avoid it. There are plenty of other stocks that you can be trading right now that don't have that risk associated with it. So you can see that the market has been making really big moves in both directions. And this 10% move from Wednesday, we're going to stay in that range for a while. You can see that the market did poke above AVWAP-Q. I view that as nice, positive price action off of a deep low. And you can see how the halfway point of this long green candle was also preserved around that 525 level. And we should get a nice little pop tomorrow, Monday morning. I'm recording this before the futures markets are open, but there was some news that there are going to be some electronics that are going to be spared from the tariffs. So that includes cell phones and laptops, things of that nature. I think that's going to bode well for the tech sector Monday morning. So I would expect those stocks to rally. And as they rally, it should lift the entire market up. We also did have some earnings news from JP Morgan Chase, Wells Fargo, and we can see from the XLF what the overall reaction was to the bank earnings on Friday. And you can see how XLF finished higher for the day. So the reaction to bank earnings has been good. Banks are going to dominate the earnings scene this week. So we'll be hearing from more of them. And in particular, we've been watching credit card delinquencies, bad loan write-offs, and they were in line with expectations. And so these stocks are actually showing a little bit of a bid. That can change pretty quickly, and we got a lot of banks that are going to be announcing earnings this week. So what do I think is going to happen this week? When you have extreme volatility like we've seen recently, things tend to settle down, especially as we start spending more and more time inside of the range of this long green candle here, especially when we have a holiday coming up. This is a holiday shortened week. We have a very light news cycle. We don't have a lot of earnings coming out this week. So the market is just going to try and get its footing, is going to try and take a deep breath, and it's going to try and settle in. So that's what I'm expecting this week. Well, that happens to work out very, very well for positions where we're selling inflated, out of the money, option implied volatility. So we need to make sure that we pick the stocks well, and that's what we're going to be focusing on. So watch for watch for a quiet week. We're getting 50.5-minute bars. So there's still plenty of movement, but at least we're not moving 300 points in a given day any longer. So we're starting to compress and compress and compress. And that's good. And then we'll figure out where the market goes next. I believe that we could see a gradual, very strained move up to this 550 level. And again, we're up above AVWAP-Q, so I view that as bullish. We should get a little bullish dose of news Monday morning and a good reaction. But what I'd like to see here at that 550 level is sluggish price movement, just an inability to really get through that level. That will tell me that sellers are still out there in risk off mode. And then earnings season will start to unfold in about 2 weeks. 2 to 3 weeks is when it really starts to crank up. And that guidance is going to be critically important. Unfortunately, companies don't have a lot of clarity. So I think the guidance is going to be cautious, and that may not even be offered in many instances because they don't know how the tariffs are going to impact their supply chains or their profitability. So they may not even give guidance. As this move gets really, really strained, and if companies start announcing that they're seeing a slowdown in demand, then we start to hit resistance and roll over very gradually. And that, I believe, will set us up for a nice entry for bearish swing trades sometime probably toward the back half of April, like maybe in the last week of April or so. We really have to see how those earnings reactions are going to come out. We have to see what the tariff news is going to look like. The big, beautiful bill is also going to be important. And right now they're trying to pass the budget bill, and it's going to go to the Senate. It passed the House. There are lots of tax cuts and lots of tax incentives. That could be a positive for the market. It's going to lay the foundation for Trump's plan. So if Republicans are able to get it through Congress, it could calm nerves a little bit. And that's really all I'm looking for right now. We had such a big move lower, and it happened so suddenly. And then we get this violent move off of that deeply oversold condition that things are going to have to start settling in a little bit. And this is also another reason why I've been telling you in prior videos about is coming. Okay, so we can't predict when we're going to get it, but we should be taking gains on short positions. And so maybe you didn't catch the absolute low, but at this stage, especially after a day like Wednesday, you're happy that you took gains and you were sidelined because the market went absolutely gangbuster crazy. And I'm sure that a lot of shorts got blown up on that move. So as I take a look at how the week is setting up, there are a couple searches that I can run. One that's nice and one that you should do is take a look at what stocks are going to be announcing earnings. So I'm just going to raise my option liquidity rating from 1 to 15. These are going to be stocks with liquid options. And then I'm going to be looking at projected earnings from today to 5 days out. So this is going to give me an idea of the companies that are going to announce this week that I'd like to keep very close watch of. And so you can see we've got Alcoa, Allied, a bank stock, ASML. That could be very important because they are a semi-equipment manufacturer. That could give us some insight into the entire semiconductor industry. More banks, BAC, Citigroup, Johnson Johnson. You got Netflix, Las Vegas Sands. So we've got a little bit of a mix of earnings in here. We've got some of the airlines are reporting, not a lot of really big names, but this at least gives us an idea of who's going to be announcing. And it's particularly important if you have any stocks that might be in the same group as these stocks, because that would be a tangent earnings play. So let's take a look at searches that might yield the type of stock that I'm looking for. And here you can see I'd like to have real relative strength on a D1 basis. At a time when the market has been falling apart, show me a stock that has been strong on a relative basis. This is the cornerstone to our entire strategy. And I'm using the custom search feature within Option Stalker Pro. I mentioned this in one of my videos last week because I've been talking about the types of variables that you would use to find these stocks. And I had put out there, hey, what if the stock was in a longer term compression when the market is falling apart? Wouldn't that be a form of relative strength? Yes, it would. You can still see SMCI's in that list and ZIM. So yes, stock's got relative strength on a D1 basis, and it's been in a compression. Great. That tells me also if it's compressing, there is support. There are buyers in a time when the market has been selling off. Awesome. I'd also mentioned that as far as price goes, we're really looking for relatively inexpensive stocks because that allows us to put half of the strike price in reserve so that if we get assigned on the stock, we have the ability to buy it on Reg T margin. If we're doing that with a $500 stock, we're not going to be able to do that because we got to put up half the strike. That's $250. And now you're really almost in a position where you have to sell bullish put spreads. And I've mentioned why I feel avoiding spreads right now is the right thing to do. And it's because those option bid-ask spreads are spread way out, and you don't want to navigate two legs if you don't have to. Option liquidity rating of 1 to 15. So yes, we're looking for stocks that are between $6 and $50. Good option liquidity. Option IV at the money. We really nice, rich premiums of 0.4 or higher. I would consider 0.35 or higher to be fairly expensive. So we're looking for that inflated premium. That's our goal because we want to sell those options as far out of the money as we possibly can. We want to get the odds in our favor. Finally, show me a stock that is not going to be reporting earnings in the next 10 days. Why is that important? Because I need to have the position on for at least a little while so that I can take advantage of that time premium decay and that option implied volatility collapse. And if the company announces within 10 days or less, I'm going to have to reel that position back in, and those options are going to retain their implied volatility because there's a surprise event coming. It's called earnings. Lots of uncertainty, so they keep those option implied volatilities in until that news comes out. Well, we want our options to expire before the earnings announcement date. Always, always, always. There is no compromise in that principle. Okay, so when we sell option premium, we are always out of the position before an earnings announcement date. And so we ideally don't want to have to reel that in before expiration. We want these options to expire worthless, and then the earnings can be anytime after that. I don't care. The earnings could be a week after they expired or a month after they expire. It doesn't matter. The trade was successful. I'm out of it. I'm moving on. So when we run this search, what kind of results do we get? Well, these are some of the stocks that came up in the search. And we'll take a look at those, but there's one that I'm particularly interested in. And that stock, well, SMCI we've already looked at. We can take a look at ZIM. Look at that nice price action on Friday. The market did rally throughout the course of the day. There's some support down here. So stock's looking okay. It's got a little bit of relative strength, but it's not the best that I can find. I would prefer a little more strength in the underlying stock. And BIS, well, here's the stock that I want to highlight. It's HIMS. And this stock has actually been treading water when the market has been doing this. In particular, what you want to do is go back and see what the heck the stock did Monday. That's when we had that gigantic sell-off to a new relative low. Ouch, that was a big move down to 480. Well, what did the stock do? It sat right on the 200-day moving average, barely even moved. Nice relative strength. This stock has been settling in on that 200-day moving average very, very nicely. There are buyers there. Awesome. Can I sell some puts right at the $27 strike price to lean on that 200-day moving average? 200-day moving average is at 26.38. It's too close. Why would I want to take that kind of risk? I don't need to get close to the money. I want to get far out of the money. Can I get down to the $20 strike price? I sure hope so. If I go down to the $20 strike price, I got to hold $10 in reserve. That's half the strike price, so that if I'm assigned stock at $20, I could buy it on Reg T because I've got $10 that I'm holding in reserve. Awesome. Well, let's take a look at what kind of return we might be able to generate at $20. What would have to happen to this stock in order for me to get assigned on it? Well, gee, it's trading at almost $27.50. So this stock could lose almost 30% of its value. Almost 30% of its value. It would have to drop in order for me to get assigned. Yeah, but is there any money in those puts? Well, let's go find out. It's the process that you go through. So we're going to take a look. There's HIMS, and we're not going to go far out in time. Why would I want to go far out in time? I want that accelerated time premium decay. I want it now. So I don't know what the market's going to do 2 or 3 weeks from now. What if earnings season turns out to be a complete disaster? Well, I don't want to be hanging out in a trade for a month right now. I'd like these premiums to just vaporize. And hopefully, while I have this trade on for a couple of weeks, the market starts to give me an idea of where it's going to be heading next. Right now, it's all over the board, and I'm just looking for any kind of consistency that I can find, and I'm trying to get probability on my side. So if we take a look, and these are the April 25s, so this would be a 2-week trade. You got to get through this week, which is holiday shortened, and one more week after that. Well, this company is not going to be announcing earnings soon. We can always confirm. You can hover over the E right here, and you can see May 5th is when they announce earnings. Confirm this through other sources, but this is a fairly reliable tool in Option Stalker Pro. And what are those $20 puts selling for? Well, they're selling for 32 cents bid, offered at 38 cents. I don't know what the market's going to do overnight. I don't know what it's going to do Monday morning, but if it sells off Monday morning, I'll probably be able to get something more than 32 cents for these options. Let's say that I get 30 cents. Let's keep the math really easy. I generate 30 cents on a $10 trade that I'm holding the $10 in reserve on. My chance of getting assigned is so small. And you can see those $20 puts, this blue dotted line is 2 standard deviations out of the money. This is going to span 2 weeks, and I'm going to generate a 3% return on the $10 that I put up. And you might think 3% is nothing. I don't trade for 3%. 3% with these type of odds is a very, very nice return. And I'll take it any old time I can get it. A 3% return in 2 weeks. So if you figure 3% and you got 25 of these events a year and you're trying to figure out what that yields on an annual basis, that's a 75% return. Boy, if you can continue to find opportunities like this, you should do it as much as you can. If you felt that that's a big move in HIMS and that I'd be willing to take a little bit more risk than that, and maybe I'd be willing to let the stock move 20%. Okay, well, it's going to be roughly $6 less. You're going to be looking at the $21 strike price. And yes, based on your personal risk tolerance, you could go closer to the money. And if you do that and you sell the $21 puts for 50 cents, now you're talking about a 5% return in 2 weeks. When you've got the market gyrating all over the place, when we have news coming out daily, you have to watch the Trump press releases because there's news coming out all the time. I can't show you a consistent trade that you're going to be able to do on a swing basis. I can't even do it on a day trading basis because the market's all over the board. All I can teach you is how to trade during the day. We've been able to find some great intraday trades as well, but the patterns and the setups change in an instant. So from a swing trading standpoint, the only thing that I could tell you with certainty is that option implied volatilities are going to start to collapse and that this low at 480 is going to be safe for the next 2 weeks. I truly believe that. And if I've got a stock that can actually fall, market doesn't make a new low, market doesn't fall 10% in the next 2 weeks. If the market doesn't fall 10% in the next 2 weeks, what are the odds that a stock that has been finding support, what are the odds that that stock's going to drop 30%, even more than the market? They're very, very low, minuscule, because the stock already has buyers, and that's been demonstrated during extreme market volatility. And so these are the types of surges that you should be running. This is the type of trade that you should be doing. Not a lot of news this week from an earnings standpoint, not a lot of economic news this week. Lots of tariff deals being worked out. We don't know if that's going to get a good or a bad reaction from the market. And right now, we don't care. We're going to let that dust settle. We're going to try and get through the first few weeks of earnings season so that we can gauge what the CEOs are providing in terms of guidance. And that will give us some clarity, and that will give the market a sense of where it's going to go next. So right now, this is the strategy. I like selling the HIMS. I would sell the $21 puts. I'd even sell them for 40 cents. I'd sell them for 50 cents. I'm going to do one contract so that I've just got a record of it so that you can see as we track these trades over time how it played out. So I'll be out there, but I'm going to wait for the market to settle down. We're going to have some overnight news and a move. So anything in the 40-cent range, I'm going to be happy with. If I can generate a 4% return in 2 weeks, I'll take it every time. So that's how I'd be approaching the market right now. If you're not subscribed to this YouTube channel, please do that, because you'll be able to turn on your notifications, and then you'll know when I'm posting other videos. And so the routine that I've kind of gotten into is I do a lengthier Sunday video with a pick. Then Monday morning, I take a day off because I've kind of given you all the information that you needed on Sunday. Tuesday, I do a really quick game plan before the open to highlight what I think would be our best trading setup. Wednesday, I do a little bit longer video before the open that highlights a pick. And then Thursday and Friday, again, I'm doing those game plan types of videos so that you know how to structure your trading day based on what I'm seeing from the prior day's price action and from what I'm seeing in the overnight price action. Thanks so much for watching, everyone. Please give the video a thumbs up, and we will see you Tuesday morning. Trade well.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel, and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.